Hello everyone, today we're going to tackle a question that gets asked a lot. I only have $100, how can I start investing? Many of you might dream of investing with large sums of money, but believe me, it's possible to enter the world of investments even with small budgets. Today, I'm going to explain how you can invest with a small budget, what risks are involved, and the most effective strategies to use. Let's get started. First, we need to understand this. You don't need a lot of money to start investing. What's important is starting early and being consistent. Think of it like this. Would you rather have $1 today or $2 tomorrow? Most people would say $2 tomorrow, right? That's the power of compound interest. The earlier you start, the more time your money has to grow. A budget as small as $100 is a great way to dip your toes into the water. You can experiment with different strategies and learn from your mistakes. Starting small reduces the risk of significant losses. Remember, investing is a marathon, not a sprint. So even if you only have $100, start now. It's a win-win for gaining experience and long-term success. Before you even think about where to put your $100, we need to talk about your goals. What are you hoping to achieve by investing this money? Are you looking for quick returns, or are you playing the long game? Defining your investment goals is like setting the destination on your GPS. Without it, you're just driving around aimlessly. Do you want to buy a house in 5 years, retire early, travel the world? These goals will determine your investment timeline and your risk tolerance. Short-term goals, like saving for a down payment on a car, might require investments with higher potential returns, but also higher risks. You're on a tighter timeline, so you might be willing to take on more volatility. On the other hand, long-term goals like retirement allow you to ride out market fluctuations and focus on slow and steady growth. You have time on your side, so you can choose investments with lower risk and potentially lower but more stable returns. So before you jump into the world of investing, ask yourself these crucial questions. How long can I leave this money untouched? How much risk am I willing to take? What am I ultimately saving for? Once you have clear answers, you can start evaluating your investment options with a focused strategy. Now let's explore some low-budget investment options that you can start with just $100. Remember, the goal here is to find investments that align with your risk tolerance and investment timeline. IRAs are a fantastic option for long-term savings, especially if you're just starting out. Think of it as a special savings account designed specifically for retirement. With a traditional IRA, you contribute pre-tax dollars, which means you get a tax break now, and your money grows tax-deferred until retirement. Now you might be thinking, retirement? I'm just trying to figure out how to invest $100. But trust me, the earlier you start saving for retirement, the better. Even if you can only contribute a small amount each month, it can add up significantly over time thanks to the power of compound interest. With a budget like $100, you can easily open an IRA at most major brokerage firms. Some even have no minimum investment requirement, making it incredibly accessible. Plus, contributing to an IRA can potentially lower your tax bill, putting more money back in your pocket. However, keep in mind that IRAs are designed for long-term savings. There are penalties for withdrawing your money before age 59 and a half, so it's not the best option if you need access to the funds in the near future. But if you're looking to invest for retirement, an IRA is a smart and tax-efficient way to start. Let's talk stocks. Now I know what you're thinking. Stocks with $100, isn't that a bit risky? And you know what? You're right to be cautious. Stocks can be volatile, especially in the short term, but they also have the potential for high returns even with a small investment. Think of it like this. When you buy a stock, you're buying a tiny piece of ownership in a company. As the company grows and becomes more profitable, the value of your shares can increase, and you can potentially earn dividends, which are a portion of the company's profits paid out to shareholders. With $100, you might not be able to buy a lot of shares in a large, well-established company, but you can still get started. Look for companies with strong growth potential, especially in emerging industries. Do your research, read financial news, and consider investing in companies you believe in and use their products or services. Remember, investing in individual stocks carries more risk than other investment options. It's crucial to diversify your portfolio and not put all your eggs in one basket. Consider investing in a mix of companies across different sectors to spread your risk. Now, if picking and analyzing individual stocks feels overwhelming, don't worry. Mutual funds and ETFs are here to save the day. These investment vehicles allow you to diversify your portfolio and reduce risk without needing a ton of money. Think of a mutual fund or ETF like a basket of stocks or bonds. When you invest in a mutual fund or ETF, you're essentially buying a small piece of all the assets held within that fund. This provides instant diversification, even with a small investment. For instance, you can invest in a technology fund that holds shares of top tech companies like Apple, Microsoft, and Amazon. Or you can choose a gold-based ETF that tracks the price of gold. The possibilities are endless. The best part? Many mutual funds and ETFs now allow entry with small budgets, sometimes as low as $50 or $100. This makes it incredibly easy to start investing in a diversified portfolio, even if you're on a tight budget. Chapter 7. Gold and Silver. Gold and silver have been considered valuable assets for centuries. They've been used as currency, jewelry, and even as a hedge against inflation. And the good news is, you don't need a fortune to invest in precious metals. With $100, you can purchase grams of gold or silver bullion, which are physical pieces of gold or silver. You can also invest in gold or silver ETFs, which track the price of these metals. Now, it's important to note that gold and silver prices can fluctuate, just like any other investment. However, they're often seen as a safe haven asset, meaning that their value tends to increase during times of economic uncertainty or market volatility. So, if you're looking for a tangible asset with a long history of value, investing in gold or silver could be a good option for you. Just remember to do your research and understand the risks involved. Chapter 8. Cryptocurrencies. Alright, let's talk about the elephant in the room, cryptocurrencies. Now, I know crypto can seem intimidating, complex, and even a little bit scary, but it's also an exciting new asset class with the potential for high returns, even with a small investment. Think of cryptocurrencies like digital gold or a decentralized form of payment. They use blockchain technology, which is a secure and transparent way to track transactions. With $100, you can buy fractions of popular cryptocurrencies like Bitcoin or Ethereum. However, it's crucial to remember that cryptocurrencies are highly volatile. Their prices can swing dramatically in short periods, so it's essential only to invest what you can afford to lose. Before investing in crypto, take the time to understand how it works, the risks involved, and the different types of cryptocurrencies available. It's a rapidly evolving space, so staying informed is key. Chapter 9. Things to consider before investing. Now, before you rush off and invest your hard-earned $100, let's take a moment to discuss some essential things to consider. Investing always involves some level of risk, and it's crucial to be prepared. First and foremost, make sure you have an emergency fund in place. This is money set aside for unexpected expenses like a medical bill or car repair. Your emergency fund should be your top financial priority before even thinking about investing. Secondly, remember that investments are not guaranteed. The value of your investments can go up or down, and there's always a chance you could lose money. Don't invest more than you can afford to lose and be prepared for the possibility of fluctuations in the market. Thirdly, don't jump into investments without understanding the market. Take the time to educate yourself about different investment options, risk tolerance, and diversification. There are tons of free resources available online, including YouTube channels, finance blogs, and educational websites. Fourthly, even with small investments, it's crucial to understand the tools you're using. Whether you're investing through a brokerage account, a robo-advisor, or a cryptocurrency exchange, familiarize yourself with the platform, fees, and how to place trades. Lastly, remember that investing can be emotional. It's easy to get caught up in the hype of a bull market or panic during a downturn, but making impulsive decisions based on emotions can be detrimental to your long-term financial success. For example, if the stock market experiences a sudden drop, don't panic and sell all your investments. Remember that market fluctuations are normal, and what goes down often comes back up. Instead of reacting emotionally, stick to your investment plan and focus on the long term. When investing with $100, patience and awareness are key. Instead of expecting huge returns, view this as an opportunity to learn. Starting small helps you gain financial literacy and lays the foundation for larger investments in the future. Diversify your investments and always make informed decisions. If you found this topic interesting, don't forget to share your thoughts in the comments below. For more videos on investing and finance, make sure to subscribe. See you in the next video.